So I've been in the process of rolling out to you guys my investor tools for portfolio building. And my Facebook page is going to contain all of this information for you guys to reference. Go in there and utilize for your own personal gain, certainly. But it carries with it some level of explanation as to how you go about properly utilizing the information. I explained to you guys how you go about using the quick reference card that I talked about. And the quick reference card is basically channeled through your risk tolerance and your investment capital. Those are the two criteria that I look at. And a lot of the questioning that I get in the investment community from new investors is, how do I start? Or should I invest in this asset? And my answer always is, it depends. Okay? And I know people get kind of sick of that because they want a definitive, yes, absolutely, go into the stock. There's nothing definitive about the stock market, all right? What is definitive is the plan and approach that you can take before you enter the stock market. Know why you do certain things. Know and validate why you participate in the stock market in the way and the manner that you do. Understand why we tax protect, all right? I had a comment come through on my channel comments that talked about YouTubers not talking about tax implication enough. I completely agree. I think if you just enter into the stock with sheer purpose of making profit over time without properly acknowledging that that $2,000 profit that you're making actually is not $2,000, it's $1,600, because you've got to account for the tax, is really doing yourself a disservice, guys. So I thought I would go over what it is that you are going to see when your quick reference card, basically the tier, gets you into the specific, the nuts and bolts, right? The tools within my job aids that I'm providing to you guys to get you guys really the answers to get in there and really self-assess. Now, it doesn't mean that you can't hit me up with questions, but I would expect at least that the questions are coming through in the context of the program that I've built. Guys, welcome to the Independent Investor channel. We're filming from New York City, New York. If this is your first time tuning into the channel, I highly encourage you to subscribe to the channel, guys. You'll be notified of future videos that we put on YouTube, and I really think this is important to get into the hands of anybody out there that's new investors. I'm speaking with people directly, and I'm validating with every conversation that people need help. They really do. And if you guys have friends out there that require that need and assistance, man, you guys know how open, honest, and trustworthy I am with providing that help to you guys. And that's the sheer reason why I'm doing it, is to create a groundswell of momentum of self-directed investors that are basically empowering themselves. It's really just that simple. But I thought it would be interesting to kind of come out and just explain to you guys what it is that you'll see within the Facebook page, to go ahead and peruse, look through it, utilize it if you may. If you're going to go through the stepped process, right, I highly encourage you guys to try to identify the quick reference card that's going to be appropriate for you. If you have $25,000 of investment capital, if you're a basic investor, there will be a card for you. And within each of the investment tiers, you're going to be given the 5 investment options, all right? The 5 investment options being passive, stock blend, passive blend, and balanced. That's the best way that I could break down the information to be simple and not get too crazy in the weeds, to give you guys at least a benchmark or a playing field and a structure to start from, guys. So please enjoy. I'm just going to roll this is a rollout of this material, and I really hope you guys enjoy kind of and appreciate the level of work that I put into this. But basically, the conservative investor will have a risk tolerance level from 1 to 3. And there's going to be 3 options basically that are presented to you guys based on your conservative approach, your basic approach, or your aggressive approach. That's how I'm going to channel you. Now, the idea being is that if you guys if you're in your 50s or your 60s or your 70s and you're looking to invest in the stock market, I built this program to be applicable across the investing landscape. I don't care. I don't care if you're 50, 60, 70. If you want to enter into the stock market, then I'm going to pull a card for you as well. If you want to invest $1,000 into the stock market and you're 52 years old, I highly recommend that you look at my aggressive card for you and see if I was 52, how I would enter you into the stock market if you were looking to put $1,000 to work in a self-directed account or a brokerage account for that matter in an aggressive posture. Everybody's different. And the hard part about this program is to try to break down the information to be applicable to everybody. And I believe in my heart I've actually done that. So if we kind of work through here, the following guidance contains investment options suitable for those seeking exposure to the stock market with a conservative risk tolerance. All right, so that's the risk tolerance from 1 to 3. And I just want to kind of show you guys kind of the idea and layout. This is off the Vanguard website. I'm going to provide the link to the website itself. There's a lot more amplifying information on there. But remember on the quick reference card how I talked about the different tiers. This is going to be the ETF tier. ETF tier 1, 1 through 3. And the 1 through 3 goes across a range of a conservative investor with a risk tolerance of 1 to 3. Very, very important that you try to get as accurate a risk tolerance as you possibly can. And then I've got this suite of investments here. So if you were a passive investor, you could come in here and pick any one of these ETF products for you as a passive investor, irregardless really. I refer to this section throughout the portfolio because it doesn't really matter so much sometimes if you have 5, 10, 25,000, but it's going to be in different percentages of allocation that you're going to get to come in here and pick out these suite of stocks. I've provided you the name of the fund and I've provided you the actual ticker symbol so you guys can go into your platforms and research them, you know, on your own as much as you want to. So this is the ETF tier. And as we kind of get in here, this is basically what I've done here to show you guys what a stock tier for technology will be. All right. Now, it's broad on the quick reference card insofar as that if you're looking to invest in a tier 1 stock, it's not going to differentiate for you whether or not you want technology or consumer discretionary or consumer staple or energy. But for most people, they kind of have a general idea whether or not they want to invest in Procter & Gamble or Apple. So I really left that piece up to you guys. What I did do and what I didn't leave up to you is my recommended percentage of allocation. And this 19% means that if I'm authorizing you to buy 1 or 2 stocks on the stock side of the house, I recommend it up to that 20% threshold, and then you need to kind of look elsewhere, right? If you're looking to house a stock portfolio with 100% of your assets, let's say with $1,000, you really need to kind of keep that allocation to around $200 and then look elsewhere to try to start to diversify the portfolio, at least from a stock perspective, all right? But this is basically what the stock tier card looks like. And I couldn't think about it any better way than this for an investor that's a beginning investor to look at this and look at 7 amazing companies. I mean, there's well over, you almost have $1 trillion of market cap just with Apple. You've got IBM, Intel, which IBM is actually probably a really nice buy right now. They just came out of an earnings report. It was actually really good. The stock adjusted back, which is fine. But Visa, Microsoft, Cisco, and Oracle, these are the companies really that as a beginning investor, if you were a beginning investor with a basic risk tolerance, or excuse me, a conservative risk tolerance, you could get in here and look at these stock tiers. Now, as you start to climb the ladder and you get into basic and advanced stock investing, these don't go away, okay? At the tier 1 stock allocation, these always are applicable. So you can always pick from this suite of stock. And as we kind of work down the list here, you can kind of see how I broke this down. Consumer staples, and a lot of people are visual learners. They are visual learners. Now keep in mind, guys, on the Facebook page, this is going to be a whole lot better. It's really clear how you can click on each one of these job aids and then click through them and actually look at these prints, and you can actually cover a lot of stocks basically using the visual reference. But I've got Coke and Pepsi, Procter & Gamble, Walmart, Costco, the Clorox Company, and Kraft Heinz Food under the consumer staples, man. It just doesn't get any more visual than this. And I think if I had this as a beginning investor, I would have been so excited, so excited. So just consider this my give back to you guys as a beginning investor. I hope you guys find this useful. Consumer discretionary, again, just want to come back and kind of point out what you guys can expect to see when you get on the Facebook page, all right? And how to kind of utilize this page here. 11% of total overall allocation to a portfolio, right? You should have in the consumer discretionary. You're not going to hit these numbers perfect. Okay, so do not beat yourself up. These are recommended. The idea behind these is that you don't take all of your money and buy all stock tier 1 under consumer discretionary. Pick one. If it's $1,000, that's about all you're going to get out of it is one from each of the sectors, and you're not going to be able to cover all the sectors. Now, if you're at $25,000 and I've recommended 5 or 6 stocks, there should be no excuse as to why you can't get a good sample from each one of these sectors, guys. But I don't want you coming in here and looking and buying all of the consumer discretionary that I recommend. As killer of a portfolio as that may be, that's really not in line with the diversified principle. All right, guys? So it's meant to be used as a stock picker's dream to come in here and say, okay, Ryan's saying Lowe's, Walt Disney, Home Depot, Target, McDonald's, Nike, and TJ Maxx, right? For potential areas of exposure in the consumer discretionary field. So this slide right here is actually encompassing 3 different sectors because the percentage of allocation is a little bit less here. And I felt like from the importance scale, I needed to provide you guys options that may be potentially covered multiple sectors, okay? So we've got the healthcare over here with Pfizer, Merck, Johnson & Johnson. Stocks I've recommended in my past. You're welcome, because you probably made money with every one of them. Verizon, AT&T, and then Exxon and Chevron is the brother and sister in the energy sector. Now, if you're a basic investor, I'm going to, for example, introduce a couple additional options here in Royal Dutch Shell and Total Energy, right? So if you're a basic investor, you would have those additional 2 options with a little bit higher risk tolerance, a little bit higher risk reward, right? But as a conservative, like these are probably the 2 best names to enter into as a cornerstone investing principle and a portfolio solution for you guys, all right? And the last one I've got here is kind of giving you guys some examples and just kind of give you guys an idea, a snapshot from my thinking on how I go about thinking about the financial sector and how I'm thinking about the materials sector and the, materials and industrial sector. I've just got Dow DuPont. That's the only representative from the Dow is Dow DuPont, and I think it's a fantastic company. But you kind of see here the percentage of an overall portfolio allocation is recommended only at 3%. So you got to be kind of careful with that and make sure that you're not buying 50% of your portfolio in Dow DuPont because the recommended is actually fairly low in that portfolio. And you've got, and United Technology is just on fire right now. I know I've recommended that in my past as well. So anybody who took me up on that advice, you're welcome. JP Morgan, Citi, and Wells Fargo. I'm an owner of JP Morgan and Wells Fargo. And then 3M down here, the big behemoth multi-product company on the industrial side of the house, guys. And that's how it's going to break down. This is the job aids that you're going to see. Again, I'm going to continue to evolve these. This is a project that takes quite a while. I'm still evolving the project, and I'm going to roll these out as we get into the basic tier and the aggressive or advanced tier but you can kind of going to see how this program is going to work. And you guys just need to kind of very simply take a step back, have a discussion. If you're out there and you and your spouse are looking to get involved in the stock market, it's a very simple approach to pull these job aids and say, wow, you know, Ryan's really put the visual reference in front of us to make it really, really easy to kind of see what our investment options are. Guys, if this is your first time tuning into the Independent Investor channel, subscribe to the channel, support the channel. Click over to the Facebook page and check out the new group that I've started. I'm going to be enhancing the page as we start to grow it out and start the community of discussion. But share the link out there with anybody that you know, and certainly leave your comments in the comments section. I anticipate a lot of positive comments, guys. This is free of charge. If you don't want to utilize the information, that's all well and plenty. Everybody has their own opinion. But I put a lot of hard work into this and kind of put myself in the position of the new investor, okay? What would I expect to see if I was a new investor entering into the stock market? I'm ready. I just don't know where to look. Guys, these job aids are aimed at answering those questions for you guys. Again, thank you for tuning in and good luck in your investment future.